Well, I don't think this is a good situation for retail traders because, in the fullness of time, these stocks are very likely going to go to zero, right? So somebody is going to end up holding them at the time when they really go to zero. So I'm I hope that not many of my customers, Interactive Brokers customers, are not in these stocks.
What are you seeing from the Interactive Brokers customers in terms of participation and appetite for stocks right now after a pretty brutal start to the year, but a nice little bounce here in the last week and a half?
Yeah, so interestingly enough, our customers, Interactive Brokers customers, are not participating in this latest rally, in spite of the fact that IBKR offers margins as low as 1.83% to all the way down to 0.83%. Our customers' margin loans have decreased by about $8.5 billion, or roughly 17% in the current quarter. Similarly, free cash deposits have increased by 7% to $95 billion. So most IBKR customers do not seem to believe the current rally. And I think that they think that there'll be a better opportunity later to get back into the market.
So pretty defensive posture there. Is that what you would say? What about overall just activity? As far as, stimulus checks have faded and Fed is tightening interest rates. What about just retail investors' embrace of the markets at all?
So our average customer has about $200,000. So these are more sophisticated customers than people who are basing their investments on relief checks.
What about technology in particular? What have you seen as far as inflows and outflows and that once beloved part of the market that has been most vulnerable to what's changed here?
So I think they are all worried about the Fed hikes, right? And although I don't think that the Fed will be able to raise rates high enough to stop inflation, I think that this is because they don't want to appear to be starting a recession right before midterm elections. Second, the higher they raise the rates, the higher interest rate payments will become on the freshly issued debt that will contribute to the nation's indebtedness. I think Treasury made a big mistake in not refinancing at much lower rates while they were available. And this situation is further aggravated by the very high level of borrowings in the $11 trillion private equity space, where managers have been trading companies among each other at ever higher prices, loaded with more and more debt. That worked just fine with, interest rates were zero, but they will not work at 3, 4, 5%. So I think we'll see a lot of bankruptcies in this space.